The war has three participants, and if the Iranians and the Israelis keep going, then the war will keep going. So it wouldn't surprise me that the US try and remove themselves, but the war continues. And what matters most for the world economy is the Strait of Hormuz and whether the oil and the gas is able to pass through it.
Welcome. With the price of gasoline in the US at now over $4 a gallon, is that enough of a reason for Donald Trump to be serious about pulling the US out of the Middle East war?
Well, it's certainly a political question that only the president can answer, but it could well be an important part of his thinking. The war certainly hasn't gone the way he intended, and it looks like he's looking for an excuse to de-escalate things.
The president's approval rating is at an all-time low. But is the war over if Donald Trump says it is?
No, it's not, because the war has three participants, and if the Iranians and the Israelis keep going, then the war will keep going. So it wouldn't surprise me that the US try and remove themselves, but the war continues. And what matters most for the world economy is the Strait of Hormuz and whether the oil and the gas is able to pass through it.
Commonwealth Bank's economic forecasts are currently based on oil at 120 US a barrel, but on Wall Street it's been suggested prices could soar well past that. How high do you believe the price of oil could go if Iran continues to frustrate the supply from the Strait?
It all depends on demand destruction. So in other words, how much people cut back on their use of oil and petrol. We are already hearing reports out of places like Thailand and even South Korea rationing in petrol. So that is a sign that the price won't go a lot higher. But if we have to hear that petrol rationing occurs in countries like the US or Europe, then that suggests that that price is going to go a fair bit higher than where we are today.
How high?
On our worst case scenario, we think it could go over $150 a barrel.
Okay, what about 200? That number has been thrown around Wall Street.
Well, that certainly is a very big number, and that would definitely cause the world economy to slow down appreciably.
Okay. What does the optimism of share market investors today rest upon? Is it that Iran will allow the free flow of oil once more if the US retreats?
Look, financial markets in the past month have usually taken a glass half full approach. I think they're going to be disappointed again, even if the president does announce that he is going to withdraw, at least in some way, from the war. I think the bottom line is that so long as the Straits of Hormuz are closed or largely closed, those markets are going to re-weaken again.
Okay. But do you see a scenario where that might be possible, that Iran could indeed charge ships to pass and so that oil shipments do once again pick up?
Well, there certainly have been some reports of that, and some what Iran calls friendly nations, they're allowing their ships to go through the straits. You could get a widening of what is defined as friendly. If it were to be all except the US, then that would be a significant breakthrough in the oil market.
What is the likely fallout on the US economy if nothing changes, and keeping in mind, of course, that Donald Trump has one eye on the November midterms?
Yes, certainly. So in the US, there are basically those that buy petrol, that's consumers and most businesses, and those that sell the petrol and the oil. And in the US, those two parties are roughly the same size. So it's not a big negative for the US economy overall, but it's certainly a big negative for US households, particularly low-income households. They have to pay a lot more for their petrol. But the thing that separates the US economy from other large economies is the AI capital spending boom. That was the quiet achiever of 2025, and if you take the hyperscalers' forecasts at face value, it's going to be even bigger this year, and it will, to use a pun, trump the oil issues currently affecting the US economy.
Donald Trump has been very vocal about his desire for rate cuts in the US, but as central banks around the world mull how the soaring oil price is going to be passed through to other prices in their economies and whether interest rates will need to rise, what is the situation in America?
So the current situation in the US is that US inflation is a little bit above the 2% inflation target. Now we've got this big inflation impulse coming through via petrol prices. That will push inflation higher. And given the strength of the US economy, I think there's a good chance that high oil prices spill over to broader inflation in the US economy. And that, unfortunately, is going to force the Federal Reserve to hike interest rates probably by the end of the year.
How much tightening do you think might be necessary?
We think they'll start in December with a 25-point hike and then hike 2 more times in the first half of next year.
Joe Capurso, thank you.
Thank you.